Good morning, all of you. Am I audible? Please respond to me. Am I audible to you all? Hello? Yes, right. Uh, Welcome back, all. I think your batch, I taught you business organization. Are you there? Last year, when I took business organization, I hope you all are there. Yes. So now this is your third semester. Hope you all completed and scored good marks in a business organization with well preparation. Very good. Thank you for replying, Asma. Very good. So this year, now, this third semester, I'm going to take up advanced accounting. You already have worked out the financial accounting sums at the beginning, right? The financial accounting sums at the beginning of financial accounting. Okay. So financial accounting basics, you learned how to pass the journal entries and recording them, classifying them, posting them in the ledger books, then preparing the final accounts, right? Recording, classifying, summarizing. You did it in the final accounting in your first and second semesters, right? So here in the advanced accounting, we are going to learn little more knowledge about these final accounts of various other firms. See, in your first two semesters, you learned about preparation of final accounts of a sole trader firm. Okay. Let me recall you. So before I enter into our advanced accounting subject, let me recall you about forms of business entities. Yes, we do have different forms of business entities, right? So like, can anyone repeat? Can anyone please? What are the different forms of business entities that we have? Different forms of business entities. Yes, the different forms of business entities, sole trader, partnership, joint family. Very good response. Joint family, cooperative societies, joint stock companies, right? So we have different forms of business entities. So as the form of nature is different, so the maintenance of books of accounts also differs. The basic fundamental principles remains the same, but the presentation of certain what to call it, certain values, certain items differ from firm to firm. Okay. Now, in your first 2 years, you learned about how to prepare the final accounts of a sole trader firm. Here in the advanced accounting system, you are going to learn about how the partnership accounts keep their books of accounts and how departmental accounts keep their books of accounts, branch accounts, how the branch means the business entities which have different branches, how do they keep their accounts, and the business entities which have different departments like different departments, dependent departments, independent departments under the sole trader or the other firm. How do they keep? And the partnership books, how the partnership firms keep their books of accounts. And then under hire purchase and installment system, how these business entities record their transactions in the accounting books. Okay, so under this subject, we are going to learn about, finally, our advanced accounting subject covers hire purchase and installment system, recording of transactions and maintenance of hire purchase and installment system, accounting records. Then partnership accounting records, how do partnership firms maintain their books of accounts. After partnership accounts, we also learn about departmental accounts and branch accounts. Okay, so our syllabus for this semester under advanced accounting is hire purchase, partnership accounts, departmental accounts, and branch accounts. 5 units. Partnership is divided into 2 units because it is vast. Now, I would like to start our first topic with the partnership. Okay, partnership is known from a familiar type of business. and you'll catch it easily. Okay, so partnership accounts, I would like to start with. I'm sharing screen here. Please do, all of you. Yes. Accounting for partnership forms, fundamentals first. This partnership form, what is partnership form of business? What, okay, how do they keep their books of accounts and maintain? Yes, accounting for partnership firms. Under the business organization, you learned about what are partnership firms, right? What are partnership firms? Let us recall our previous knowledge about partnership forms. So under this topic, you are going to about what a introduction, meaning of partnership form, features, and registration of partnership form, partnership deed, provisions of partnership act in absence of partnership deed, and preparation of partners capital account. Yes, if you look into this, yes. What is partnership firm? When two or more people join hands to set up an enterprise and share its gains and losses, we call them as a partnership. Means people join together and with an object of earning profits, and they, whatever they join with the capitals, they share the profits either in agreed ratio or based on their capitals. Such type of business we call as a partnership form of business, right? So next, the Partnership Act has given its definition about the partnership forms, and in association between two or more people who have consented to share the profits of an enterprise carried on by all or any of them acting for all, we call as a partnership form of business. Yes. If you look into the main features of a partnership form, first feature is it's a main features of partnership: profit sharing. How do they share the profits? Equally or in agreed ratio. Partners share their profits either equally or in agreed ratio. Now, liability. If you look into the liability of partners, it's a unlimited and joint. All the partners' liabilities are unlimited and joint. What does it mean? Unlimited means if any losses incurred to the debts incurred to the firm, to clear up their debts, not only their capital accounts, but also from their private properties will be considered in order to clear the debts of the firm. That's why we say it is unlimited. Then what is meant by joint liability? Joint liability means uh, if the acts of any one partner's liability makes other partners also liable. Means for the purpose of whatever the action that the partner has taken, the liabilities are incurred, that makes other partners also liable. That is what joint liability. Next one is registration. The registration of a partnership form is not compulsory, but it is desirable. Why? Because the registration of a form has an unregistered form has certain drawbacks. So to overcome those drawbacks, it is desirable for the partnership forms to get registered. Actually, as per law, no requirement, but for the benefit of the firm itself, to overcome its drawbacks as an unregistered firm, it is desirable for the partnership forms to get registered. So these are the drawbacks. Firm not registered, it cannot file a suit against the third parties and cannot file suit against members of the firm itself also. That is the reason why it is desirable to get registered. Yes. The next one is partnership agreement. Yes. A partnership firm is based on an agreement. Partnership firm is based on agreement. It can be, an agreement can be an oral agreement or a written agreement. Generally, with the oral agreement, there may be chances of raising differences among the partners at the end of the period. So, disputes may arise that may lead to the failure of the business or dissolution of the winding up of the business. So, in order to overcome these drawbacks, again, partners go for a written agreement. Okay, so a written agreement will indirectly imply the means under the agreement, the partners will have a understanding about their terms and conditions, rights and duties, all that. Okay, so if there is no agreement, again there may be a problem. Disputes may arise. Okay, so generally it is advisable for the partnership firms to have a written agreement. But still, if in any case, if any firm does not have any written agreement, then they do follow the provisions of Partnership Act 1932. Okay. A written agreement is said to be a partnership deed. If agreement is on the writing, then it is said to be a partnership deed. And under this partnership deed, the partners are supposed to give the, agree upon the terms and conditions of a business, rights and duties of the partners, and how do they share the profits and losses, what are their responsibilities, what are their capital contributions, what are the terms for admitting a partner, what are the terms for retirement or the dissolution of the firm. All these, upon these all aspects they discuss and they do come to an agreement and keep that agreements in writing in this document called partnership deed. Once this document is ready, it is to be stamped and get registered. All these partners have to sign upon this deed. Okay, and they have to register with the registrar. Then only get valid. Okay. The next, I said there is some possibility. Certain forms may not have a deed. Written agreement is not there, and they don't have the deed. Then how to dispute? How this dispute has to be solved, or how to make their adjustments related to the sharing of profits, or valuation of goodwill, or what you call admission, whatever the terms and conditions or rights, duties, or points are relating to the business, how to do. So in that aspect, not to arise any disputes, companies Partnership Act has given certain provisions. So let us see into the provisions of Partnership Act. A Partnership Act generally provided certain provisions for the firms which have no partnership deed. So in absence of partnership deed are required to follow or absorb these provisions of Partnership Act. So what are those? First one, profit sharing ratio. So how do they share the profits if there is no agreement? Equally. Okay. If there is no agreement, then the partners are supposed to share their profits equally. Next one is interest on capital. Yes. If there is no agreement, no partner has been paid any interest upon their capitals. Means firm will not pay any interest upon the capitals of the partners. Okay. Similarly, as there is no interest on capitals of the partners in absence of agreement, similarly, there is no interest on drawings charged by the firm upon the drawings. Okay. So next, salaries. No salaries, no commission will be paid to any partner if there is no written agreement. So no partner is entitled to get a salary or commission even when he is working under partnership in absence of any agreement. Finally, but if any firm partner has given a loan to the firm, if any partner has given a loan to the firm, then upon the partner's loan, a firm has to pay 6% interest per annum. Okay, so sometimes a firm needs some money. Instead of taking it that a loan from an outsider, partner only has given that loan to the firm, right? So then upon that partner's loan, firm has to pay whether there is agreement, according to agreement. If there is no agreement also, firm has to pay at least 6% interest upon that loan amount. Okay, so these are the provisions of a Partnership Act in absence of partnership deed. This topic is very much important to remember because for the partnership accounts, in order to work out the problems under partnership accounts, this is very much important provision, because sometimes in the question, he will not give you the profit sharing ratio of the partners. Then how you will distribute? Equally. He will not mention about partners loan amount. He will give the loan, but he will not mention about the rate of interest upon the partner's loan. Then even if it is not given, you are supposed to, it is an implied rule. Okay, so say for example, in the question you have been given partner's loan amount, but not entire question, there is no point upon the interest on loan of the partner. Then you should not leave it. It is an implied adjustment or implied rule that when partner's loan is appearing in the question, you are supposed to provide interest on loan to the partner at a 6% per annum. So remember children, these are the provisions relating to the profit sharing ratio, interest on capital and drawings, and salaries and commission, and interest on loan to form by the partner. So these provisions are important while doing the problems, right? Let us move on to the next one. These are explained here in detail. Capital accounts. Right. I'm sharing other screen. Please do it. So now here we are going to do with the now how do these partners prepare their final accounts, right? Not you all worked out the partnership sums, right? You all worked out partnership sums. Is this screen visible? Profit and loss appropriation account, part 2. Is visible? Yes. Thank you for responding. Yeah. Let me tell you, final accounts. You all worked out final accounts, right? What are the accounts that you find under the final accounts? What type of accounts you will find when you are preparing the final accounts? In final accounts, what accounts or statements you open? Can please? Trading account, not cash account. Final accounts I'm talking about. Trading account, profit and loss account, and balance sheet, right? So in trading account considers the direct expenses, profit and loss account considers the indirect expenses and revenues, trading account direct expenses and revenues. Whatever the final profit is there, what do you do with that profit? What do you do with that profit? We'll transfer that profit to the balance sheet. And where do you show that? Where do you show that profit in the balance sheet? On liabilities side. How do you show? Directly you will take. On liability side, do you take directly? No one? No, we don't take directly. We add some capital. We add we add it to capital, right? The profit, whatever you get after preparation of profit and loss account, that profit we add to capital under the balance sheet on liability side. So what is capital? Owner's investment. So final profit, whatever is received, that will be taken by the owner. So that whatever final accounts you prepared till now are belongs to a sole trader. So only one owner, one capital. That capital will be that profit earned in the business will be added to that owner's capital, right? But here in partnership accounts, you have more than one owner, right? In partnership accounts, you have more than one owner. And you are supposed to distribute this profit to all the more than one owner. We call them as the partners. So whatever the number of partners are there, to all those partners, this profit has to be distributed. But before the distribution of the profit, there are certain adjustments required to be made, because in the partnership business, in sole trader, only one owner, he himself do everything for him. So no need of a salary, no need of commission, nothing. Whatever he gets, that entirely he only enjoys the profit. But in partnership, it's not like that. There are more owners, that means more partners sharing the profits. So the work also be shared, and for which partners has to be paid. So whatever the adjustments, so in simple, profit and loss account, like in final accounts, even in partnership accounts, we do prepare trading account, profit and loss account, balance sheet. But after preparation of the profit and loss account and before preparation of balance sheet, in partnership accounts, we open two different accounts. That is what I want to say. I repeat once again, in profit and partnership accounts, while preparing the final accounts, we open two accounts after profit and loss account and before balance sheet. Remember children, after preparation of profit and loss account and before preparation of balance sheet, in between these two, we are supposed to prepare two more accounts under the partnership accounts. Those two more accounts are profit and loss appropriation account and partners capital account. What is profit and loss appropriation? This profit and loss appropriation account can also be called as a profit and loss adjustment account. Okay, they also called as a profit and loss adjustment account or profit and loss appropriation account. I'll give you last 5 minutes time, then I'll clear your doubts. Please note down your doubts. Look into this profit and loss appropriation account. What is this account? After preparation of the profit and loss account, whatever the net profit you get, first that net profit will take on the credit side. If you are getting a loss, we'll take it on the debit side. This is the appropriation or adjustment, means whatever profit raised by the company, the firm, by deducting all its outside firm's liability, firm's expenses, and by adding firm revenues, whatever final profit made by the firm, out of that profit, before distributing to the partners, there are some adjustments required to be made by the firm which are relating to the partners. So profit and loss appropriation account is an account which is nominal in nature. Okay, it is a nominal in nature, and under this account, all the adjustments or appropriations of profit are shown. Okay, the profit and loss appropriation account is a nominal in nature, because in this, expenses or revenues to the firm we record. What expenses, revenues? For the partners, whatever the expense incurred on the partner, whatever the revenue earned from the partner, those will be shown in this appropriation account. So means before distribution of the profit to the partners, this profit has to be adjusted with the appropriations. Okay, so let us see what are those. So interest on capital. Means if the firm is paying interest on the capital of the partners, then that is a loss, expense to the firm, because capital is owner fund. Upon the owner fund, company, that is firm, is paying the interest. So interest on capital is an expenditure. So we take it on the debit side of the appropriation account. Salary to partner, commission to partner. If the firm is paying salary to any of the partner or commission for making the business, then those also an expense to the firm. So salary to the partner, commission to the partner will take on the debit side. The next one, interest on partner's loan. If a firm is paying interest on the loan taken from the partner, that also. Now, on credit side, what will take? The profit that is made or you got out of preparation of profit and loss appropriation account will take on the credit side. Other than that, interest on drawings. Interest on drawings. What see, as interest on capital is an expense to the firm, interest on drawings is an income or revenue to the firm, because if a partner has withdrawn some amount from the business for personal use, upon that amount, the firm will charge some interest. That is revenue. So, in simple to say, profit and loss appropriation account. Remember, from the examination point of view, I am telling you now, on debit side, you take all expenses. From the firm's point of view, think from the firm's point of view, take all expenses, and credit side, take all revenue to the firm. Okay. So, first, transfer the profit, the net profit that you got after preparation of profit and loss account in the question. Okay. Then, if an interest on capital is charged upon the partner, paid to the partners, total, all the partners' total interest on capital has to be shown on debit side. If any partner is earning salary, that means if a firm is paying salary to any partner, that also we take on the debit side. If any firm is paying commission to any partner, that also we show on the credit side. Okay. And loan, interest on loan to partner, if anything is there, that also we show on the debit side. So after taking, and drawings. Similarly, interest on drawings. If partners are paid interest on capital, then they will be charged interest on drawings also. So interest on drawings, if any partner is getting drawing interest, charging that all the partners' drawings together. Okay. So the difference between the debit and credit total is going to be transferred to a partner. That is the distributed or distributable, the profit that is ready to distribute to the partners. So the difference on the debit total and credit total we transfer to the partners' capital account in their profit sharing ratio. So this partners' capital at the end, whatever you are seeing is a balancing figure. Balancing figure in the sense at the end, the difference amount, what you calculate, the difference, that's going to be. It may be a profit or it may be a loss. Whatever it is, that each of the partner in their profit sharing ratio we distribute. You may be asked to pass the journal entries also. See here, see profit and loss appropriation account. I think you people learned the easiest way of remembering the partnership, passing of journal entries from ledger. How? I'll tell you, see. See, to pass the journal entries for interest on capital, salary, commission, interest on partner's loan, for these three or this partner balancing figure also, how to pass the entries, simple terms I'll tell you. See, in a ledger account, where do you take in these? Debit side, right? So as you are taking it on the debit side, in the journal entry, you take it on the credit side. Then what you take on the debit side? Profit and loss appropriation account. I'll show you with the example. Let me come back. Yeah, I'll take one slide and so 1 second, I'll show you. Is this screen visible? Is this screen visible? Please respond now. Yes, na? Word document. What document is visible now? Yes. See, ledger account. In ledger account, whatever you what is the ledger account? Actually, T-shape, right? In T-shape, this one is called as this. Your left-hand side part is called as debit, and your right-hand side part is called as credit. Just names only those are, right? This is ledger account. In journal, how do you do the journal entry? Journal entry, how do you pass? You take one account on first line, and two means every transaction, double entry concept. As every transaction has twofold effect, so in every transaction, two accounts involved. So one account we take on the debit, that is on first line, which is called debit, and the second account we take on the credit, which we start with the two, right? I hope you all learned. So this is the journal entry and this is the ledger posting, right? So here now, this ledger posting, whatever you are debited here, that when you are taking to the ledger posting, we credit it. We take it on the credit side. Okay. So whatever you are debited in the journal entry, that you whatever you credit in the journal entry, that we debit in the ledger posting. So in journal entry, if you debited, that you take on the credit side. If you credited, you will take it on the debit side. But remember, whichever the account you open, that account, the same you will not take. Say for example, now we are talking about the profit and loss appropriation account. Profit and loss appropriation account is this. In this profit and loss appropriation account, debit side, what all you are taken? What all you are taken on debit side? Interest on capital, right? Then salary to partner, right? And commission to partner, right? These all you are taken on the, forget about the spelling mistakes, commission to partner, whoever the partner is getting that, right? These are, and one more, interest on capital. Sorry, interest on loan to the partner. Interest on partner's loan. The treatment is you can do in another manner also. This is a simple manner I am teaching you. So these are the items which are taken on the debit side of profit and loss appropriation account, right? Which account is this? Profit and loss appropriation account. Or you also can say adjustment account. Profit and loss appropriation account or adjustment account. You can call it as any name. So you, in this particular account, you are taken these all on the debit side. So when you are asked to pass the journal entry, where are these all accounts? On debit. So in journal entry, where you are supposed to take? On credit. That is to interest on capital, to salary, to partner, to commission to partner, to interest on partner's loan, Okay. So then what will come on the debit? Are you getting my point? See, what in profit and loss appropriation account, you have taken these all on debit side, right? So these all debit side means what I said will come on the credit side of the journal entry. So we have taken on the credit, okay, but entry is not completed. In debit, you are supposed to take. So what you will take on the debit? My writing part is not visible. So check, is it for everyone? For everyone? Oh, one second. One second, one second. I'm sharing. Document. Is it okay now? Huh. When I asked, you all said yes. So I thought it was visual. Right. See, this is profit and loss account. Debit under a ledger account T format. Debit side left hand, credit side is right hand is credit side. In ledger, you have every transaction has two accounts. One account we take on the first line, for which we say as a debited. The other account we take on the second line, which we say as a creditor. We start with the term two. Okay. So I said in ledger, in journal entry, whatever is debited will be credited on the ledger in the ledger account. And journal entry, whatever is credited will be debited on the in the ledger account. That is what I told you. Okay, so now I'm explaining you profit and loss adjustment account. This is what the pro forma I showed you. Profit and loss adjustment account. Interest on capital, salary to partner, commission to partner, interest on partner's loan. We are taken on the debit side of profit and loss appropriation account. Now, if you are asked to pass the journal entry for this, how do you take? So these all whatever debited in the ledger are to be taken on the credit of the journal entry. So two interest on capital, two salary, two commission, two partners interest. Okay, like that you are supposed to take. Then now the question, what will come on the debit side? Journal entry. Debit in journal entry, what do we take on the debit? So from which account you all taken all this? We took all these from the profit and loss appropriation account, right? So on the debit side of the journal entry, we write profit and loss appropriation account. Okay, because these all from the debit side of the account we have taken and credited. So in debit, what in journal entry debit side, what will come? From which account? You put a question. From which account I have taken these? From the profit and loss appropriation account. So on debit part, profit and loss appropriation account will come. Now, credit side of a profit and loss appropriation account. What you have the credit side of profit and loss appropriation account? Interest on drawings. Okay. Interest on drawings. And then what you have next on credit side? Same thing again, you will have a same partner's capital account, which is a balancing figure. It is the balancing figure, which means difference between the debit and credit. Right? Debit and credit. So, what entry will pass for this? Now, tell me. Whatever is credited in the ledger has to be taken on the debit. So, here you will take interest on drawings account data. From where you are taking this interest on drawings? Taken from which account? So, taken from which account? From profit and loss appropriation account. Right? So, we'll write that only. to profit and loss appropriation account. Understood? So, because see, this we should not take in the same profit and loss appropriation account. Again, you should not write profit and loss appropriation. That you remember. Okay? You should not write. This will go. Okay. So we have taken interest on drawings here and put a question, interest on drawings, in which account I took from which account? I took from profit and loss appropriation account. So in credit, a profit and loss appropriation account will come. Okay, that's how you pass the journal entries. It's very easy. And partners capital account. In partners capital account, again you write partners capital accounts are credit side in the ledger. So in general, you are supposed to take on the debit side. Partners capital account data are to from where you are taking profit and loss appropriation account. Okay, I hope you all understood this. So now I'm sharing the other screen. This. Yeah. So same entries here. Once you pass the journal entries, you are supposed to prepare the profit and loss appropriation account. We are supposed to prepare partners capital accounts. We are supposed to prepare partners capital accounts. Please see here the question. Amit, Babu and Charu are partners, have informed, contributed their capital for 50,000, 40,000, 30,000 in the ratio of 3:2:1. Okay. And Amit is to pay salary 1,000 per month. And commission B, Babu get a commission of 5,000. It is also provided that interest to be allowed on capital at 6% per annum. The drawings for the year were Amit 6,000, Babu 4,000, Charu okay, and 2,000 drawings of these three. Next one, interest on drawings are given directly. Sometimes he'll give you the interest on drawings percentage. Okay, upon the drawing amount you are supposed to calculate. So interest on drawings of Amit, Babu, and Charu has been given. The next you have net profit as per the profit and loss account. See here he gave you just because he asked you asking you only to prepare the profit and loss appropriation account. So how do we prepare? Please take the screenshot of this question, all of you. Please take the screenshot of this question, all of you. So let us see how do we prepare. So we need capitals of these three partners in order to calculate their interest on capital. So Amit capital is 50,000. Upon 50,000, 6% interest you calculate. How much you get? 3,000, right? 3,000 is the interest on capital of Amit. Next, Babu capital is how much? 40,000. So upon 40,000, calculate 6% interest. Okay, how much you get? 6% into 40,000, 2,400 is interest on capital. Okay, the next, Charu's capital has been given as 30,000. Upon 30,000 Charu's capital, calculate interest on capital at 6%. So 6% into 30,000, 1,800 is going to be Charu's interest on capital. Like that, Amit 3,000, Babu 2,400, Charu 1,800 is a interest on capital. We calculated. Next, what do you have? Interest on drawings. See, we don't take the drawings. Remember, children, in profit and loss account, we take only interest on drawings, but not the drawings. Remember that. So, interest on drawings 270, 180, and 90, the three partners. Next, salary. Amit is getting salary of 1,000 per month he gave, but you prepare the final accounts at the end of the year. So you are supposed to take for 12 months, 1,000 into 12, 12,000. And commission is 5,000. Directly 5,000 will take. Okay. The profit is given as 35,660. So with this information, look at this. Net profit from the profit and loss account. Actually, you are supposed to show here. Net profit from the profit and loss account. We will take a 35,660. You are supposed to write profit and loss account. Within the brackets, net profit. Profit and loss account, 35,660. This has been given to you. And interest on drawings, all the three partners, Amit, Babu, Charu, all the three partners, interest on drawings were given in the question only. That we have taken, added all the three partners' drawings, interest on drawings, and we took it in the amount column. Right? So, credit side part is over. Now, on debit side of profit and loss appropriation account, what all come? In pro forma, I showed you. This is the pro forma. See, this is the pro forma. So, what all comes? Profit already, it is profit. So, we took it and credit. Leaving that, what do you have? Interest on capital, salary, commission, interest on partner's loan. In this question, we don't have the partner's loan. So, no interest on partner's loan. Salary is there, commission is there, interest on capitals are there. So, interest on capital of A, B, C, we just now calculated 3,000, 2,400, 1,800. All these three together add and show you. Next, A is getting a salary of 1,000, he said. So, multiply with the 12,000 per month. So, 12,000. B commission given as a 5,000. Okay. So, these are the things which are being provided to you. Yes. This interest on capital. The interest on capital, salary, commission given to you, and this is net profit and drawings are given to you. Do the total of these items. 7,000. This credit side total is 35,660 plus 540. You are getting 36,200. And then debit side total is how much? 7,200 plus 12,000 plus 5,000. So how much it is? 24,200 is the debit total. So credit total is more than the debit. 24,200, 36,200. So difference is 12,000. So debit side is less. So we took the difference amount in order to make the two debit and credit equal. We took the difference amount on the debit side, that is 12,000. So this 12,000 is the profit to be distributed among the partners in their profit sharing ratio. So what is their profit sharing ratio? 3:2:1. This profit sharing ratio 3:2 means Amit gets what is the total share? Add these three. 3 plus 2 plus 1. 6. Total share is 6. In that total 6, Amit is getting 3 of that. Babu is getting 2 of that, and Sharu is getting 1. Okay. So now this profit 12,000 in 3:2:1 ratio, you are supposed to divide among the three partners. So how do you divide? 12,000 divided by 6. How do you got the 6? 3 plus 2 plus 1. Their total share is 3 plus 2 plus 1. 6. So 12,000 divided by 6. How much you get? 2,000. 2,000 into Amit's share is how much? 3. So 2,000 into 3, 6,000. And Babu's share is 2. So 2,000 into 2, 4,000. Charu's share is 1. So 2,000 into 1, 2,000. So total 12,000. That's how profit and loss appropriation of account we completed. Understood? Did you all understood? So this profit and loss appropriation account. Okay. So once you prepare the profit and loss appropriation account, means as I mentioned, after preparation of profit and loss account and before preparing the balance sheet, in partnership accounts, we prepare 2 other accounts I said. So one is this profit and loss appropriation account or adjustment account. That means whatever the profit made by the firm. Before distributing this profit to the partners, again that profit needs some adjustments. What are those adjustments? Adjustments relating to the partners only. Means firm need to pay partners in the form of partners upon their capitals, interest upon their capitals, salary to the partner who worked with the firm, commission for the partner who worked on the commission basis, and drawings. Sometimes it may charge drawings, interest on drawings. So these all adjustments. After doing all these adjustments, whatever the profit is left, that only is going to be distributed to the partners in their profit sharing ratio. Okay. So, after preparation of profit and loss account, partnership accounts prepares this profit and loss adjustment account or appropriation account. Then what is the other account? The second account before balance sheet is to be prepared as capital accounts of the partners. Why do capital accounts, madam, we take directly the capital in the balance sheet? See, in final accounts, in first 2 semesters, you took the capital directly and the profit directly added to the capitals of the partners. That's fine. But here, partners are different, more than 3. Just take this example only. Here only. So how many partners we have? 3 partners. 3 partners are there. 3 partners capitals. And for these 3 partners, whatever 12,000 profit is there, you are supposed to add. But with that, is that over? No. Partners are getting not only capital, partners are, not only the profit share, they are getting their interest on capital. So you need to add interest on capital to the partner's capital. And they are paying interest on drawings. So you need to subtract the interest on drawings upon their from the capital. And one partner is earning salary, which is to be added to the capital of the partner. One partner has been paid commission, again, which is to be added to the partner's capital. So that means a partner's capital account has so many adjustments before showing it into the capital balance sheet, right? So take Amit only. So Amit capital, to the Amit capital, you are supposed to add interest on capital, add salary, add final profit, and minus the drawings, interest in drawings and the drawings. These 5 adjustments are there. If you are supposed to show all these adjustments of each partner directly in the balance sheet, a balance sheet looks like a very cumbersome, is very clumsy, right? That is the reason why we prepare partners capital account separately in order to show the adjustments relating to the capital balances of the partners. After making all those adjustments, whatever the final figure that we get, that final figure will be taken directly into the balance sheet. So we prepare under the partners account, partnership accounts. After preparation of profit and loss appropriation account, we are supposed to prepare partners capital accounts also. 3 partners are there. 3 partners. All the 3 partners have the adjustments relating to interest on capital, interest on drawings, and what you call the share of profit at the end. These all have to be adjusted. Then only you can show the final value of their capital balances. So that all we cannot show in the balance sheet. We can show, but it looks very clumsy. And with too many figures, too much confusion. So what we do? We prepare first capital accounts. See here on the question, capital accounts we are preparing. Okay. In this capital accounts, we open one capital account is because the particular column for all the partners are same. So instead of opening separately for each of the partner, in one only we opened columns for each of the partners. Particular columns are same for all the partners. Only amount differs. So instead of opening separate account for each partner, we combined account we opened taking separate amount columns for each of the partners. So partners capital account. If you remember your previous knowledge, recall your previous knowledge, capital account shows credit balance. Okay. So capital account of the partners, for the partners, it is Remember from the capital account, you remember from the partner's point of view. Capital account, you remember from the partner's point of view. What you are supposed to remember from the partner's point of view? See, on credit side of partner's capital account, everything whatever adds value to the capital balance of the partner or any transaction which increases the capital balance of the partner, that we take on the credit side. Any transaction which decreases the capital balance of the partner, that we take on the debit side. Remember children, partner's capital account, on debit side what all comes? The transactions, the values which decrease the balance of capital, the partner's capital will take on the debit side. The capital, partner capital balance decrease, whatever transaction decreases, that we take on the debit side. And whatever the transaction that increase the capital balance of a partner, that we take on the credit side. In that case, from the profit and loss appropriation account, see, so opposite to profit and loss appropriation, opposite side, interest on capital, salary, commission, fees, capital balance. All debit side parts, whatever are there, we take it on the credit side of partner's capital account. But along with that, the capital balance is also to be taken, which has been given in the question. First, you are supposed to take the capital balances of each of the partner, which will be given to you in the question only. Okay. So how you write for that? Balance brought down. We write balance brought down for the capital balances of the partners, which was given in the question. After that, from the profit and loss appropriation account, whatever you have taken on the debit side, that we take on the credit side of the partner's capital account. So interest on capital, A's share is 3,000, B's share is 2,400, C's share is 1,800. Next, salaries. Who is getting salary? A. As A alone getting the salary, so you are supposed to show salary only in A's account. Next, commission. Who is getting commission? B. As B alone getting commission, you are supposed to show commission only in B's account. Finally, share of profit. This is the balancing figure, and you distributed the final profit to all the three partners in their profit sharing ratio. So, balance capital. From where you are taking this capital, in capital account, you should not write capital. From where you are taking this figure? From profit and loss appropriation account. So here you are supposed to write profit and loss appropriation account, the share of their capital profit, each of the partner. So from profit and loss appropriation account, debit side items have been posted on the capital account credit side. Now what left? This you should not take. This we will not take. We will take this one. Interest on drawings belongs to the partners. Partners interest on drawings. Okay, all three partners are there. So in the capital accounts, debit side, interest on drawings, we will take. Along with that, you also are supposed to take the drawings which had been given in the question. Drawings were given in the question. A 6,000, B 4,000, C 2,000. So all the three partners' drawings we will take first, then interest on drawings from the profit and loss appropriation account. Now what you do? Do the difference. Do calculation. See A's total. Do credit side of A's capital account. 50 plus 3 plus 12 plus 6. So how much is this? 50,000, 12,000, 62,000 plus 6. 62 plus 6. 62 plus 6. 68. 68 plus 3. 68 plus 3, 71,000. A's credit total is 71,000. And debit total is 6,270. So 71,000 minus 6,270. 71,000 minus 6,272. And the difference you put it here. Right? Same way for B. Do the B's credit total. 42,400 plus 5,000, 47,400. Plus 4, 51,400. And here 4,180. 51,400 minus 4,180 to the total and put it on the balance. Carry it on, sir. Difference, total I to did. Find the difference and tell me. 71,000 minus 6,270. 51,400 minus 4,180. Then C total 31,800, 33,800 C total. 33,800 minus 2,090. Then C total is 30,000, 31,710. Okay. Like that, you'll prepare the. So whatever the balance carried down here, the balances you'll get for the partners. These totals, whatever here you get the difference of the partners' capital accounts, final value. Very good, very good. So that you will get these balances, whatever you get. These are the figures which we show in the balance sheet. Understood? Okay. So these are the figures which we show in the balance sheet while preparing the balance sheet. Understood now? So in partners capital, see these many adjustments. If you show directly in the balance sheet, your balance sheet will be occupied with so many figures and giving lot of confusion. Right? That's the reason why in partnership accounts, as the number of partners are more and many adjustments are there to the capital before showing the final value of the capital, we prepare separately the capital accounts of the partner, and before capital adjustments, whatever the adjustments of profits are there, to show that we prepare profit and loss appropriation account. Okay, is that okay? Profit and loss appropriation account. We prepare. Why do we prepare profit and loss appropriation account? It's to show the capital profit adjustments of profits to the partners. Okay. Profit and loss appropriation account. So what is profit and loss appropriation? Let me conclude. Profit and loss appropriation account is a nominal account. It shows all the adjustments relating to the profit. Okay, from the all adjustments relating to profit. Okay, partners adjustments related to partner. Okay, by nominal account, only expenses and revenues of the firm will be shown. So, our debit side item shows the expenses of the firm, and credit side item shows the revenues of the firm. From the firm's point of view, debit side items are expenses, credit side items are revenues. Now, after profit and loss appropriation account, the next account before balance sheet we prepare is partners capital account, which again from the partners capital account, from the profit and loss appropriation account, debit side items we show on the credit side item we show on the debit side. Along with that, from the given question, you are supposed to take the capital balance of the partners on credit side and drawings of the partners, which is given in the question on debit side. The difference between these two balances is going to be the closing value of the capital accounts, which is to be shown in the balance sheet of the company. Understood? Is that okay, children? I hope I made you understood the basic concepts. So we learned in partnership accounts how to prepare profit and loss appropriation account and capital accounts of the partners. Please take the screenshot of this question 2 also. Okay, take the screenshot of question 2 also, so that it will help you in preparing. Next, tomorrow we have one more class in which we are going to start the final accounts, preparation of partnership final accounts. Okay. I think in our given scheduled time, in tomorrow's class, we will be able to complete only one sum, a complete final account sum of the partnership account forms. So I request you all to participate, make the continuity so that you will understand, okay, and join from the beginning and be there till the end. One second. Yeah. Here I am giving the link. You can. So I shared the link here. Both the PPTs, whatever are available, I'll share you children. Thank you. I just now sent. Please see the chart above links. In chart, please check. I sent in the above link. I sent. Acha to Buharo it gonna. One second. One second. It has. I didn't check. Now you can, I'm unmuting you all, allowing you to unmute yourself. You can speak.
Good afternoon, ma'am.
Yes,
This
good
is
afternoon.
Sumati. Ma'am, can you please explain in Telugu, ma'am, tomorrow?
I'm not able to hear your voice, anything.
Can you please explain in Telugu, ma'am?
Yeah, I can speak.
Are you listening to me, ma'am?
Yeah, you speak, ma'am.
Ma'am, can you please explain in Telugu, ma'am? Telugu also.
Actually, you have Telugu class separate, na, ma'am?
Okay, okay. When, ma'am?
Same timings, even for Telugu, same timings.
Okay.
What do you call, all subjects in Telugu also they are conducting.
Okay, ma'am.
You
Today, ma'am?
might be link, see timetable you have with you, right? So that timetable
Okay, okay, ma'am.
clearly subject code, timings,
Okay.
medium.
Okay.
All these three you please check once. Okay?
Okay, okay, ma'am. Thank you.
No
Thank you,
problem.
ma'am.
Okay, welcome.
जानेंगे दीवानी करो देखती नहीं हाल पड़ जाए चैनल करी
See children, I sent now. I hope you all got the links now. So this is the today's 2 classes. And whatever we discussed in the class, everything is from your study material only. Our material are very well designed, accepted by all universities in foreign countries also. So please do follow our material. You don't need any separate books or material again. An important question first, whenever I'm taking the class, please concentrate what we are doing in the class present. If you see, our classes are only counseling classes. We try to cover maximum all important topics only. Thank you, children. Thank you. We'll meet tomorrow. Be ready with the paper, pen, tomorrow's class. Okay? All
Yes,
of you
ma'am.
be ready with your paper and pen
Okay,
for
ma'am.
tomorrow's class.
Okay, ma'am.
I'd like to give you the page number also. Just a minute. If you have the materials with you, actually no page.
ऑनलाइन हो नहीं तो बॉयज कहाँ है बॉयज का ना ऑनलाइन में दिया है ना पर
Ma'am, in material, it's 4th unit, right? Hello?
Material, if you have 114 question 3, prepare. Okay. So tomorrow be ready with the paper, pen, calculators also. Paper, pen and calculator. We'll work out the final accounts of partnership firms.
Okay.
Thank you, children. Thank you for being here. See you tomorrow.
चलो जाओ कल नहीं ना कितना बजते की देखो हाँ इनका
ఎవరు వచ్చారు డోర్ దగ్గర
Excuse me. Hello.
Dubbing under the graphic and extract summary. More pieces for need to just write this for the dubbing. To extra media.
వీల్ 7 లో ఏదో 2 కప్స్ ఉన్నాయి సార్. అదే ఎడిట్ నోట్స్ సార్. ఇంకోటి ఇది మన వాళ్ళ మదర్ చనిపోతుంది కదా సార్, చనిపోయినప్పుడు టైమర్ దగ్గర మిస్ మ్యాచ్ పెడదాం అన్నారు. చనిపోయినప్పుడు ఇప్పుడు తను మదర్ అరుస్తుంది కదా సార్, అరిచిన తర్వాత టైం దగ్గర 10 minutes అటు ఇటు పెడతానని చెప్పాను. చైత్ర మదర్ చనిపోతుంది కదా సార్, అరుస్తుంది కదా సార్ మమ్మీ అని చెప్పారు. అక్కడ టైమర్ మాట్లాడుతున్నప్పుడే సైడ్ కి ఒక టైమర్ పెడదాం అన్నాం సార్. 10 minutes మిస్ మ్యాచ్ ఉన్నప్పుడు పెడదాం. ఒక ఫస్ట్ ఇస్తా ఓకే సార్. అసలు బ్రో చెప్పావా?
ఇప్పుడేం క్లాస్?
చెకింగ్ అదే మరి ఎక్కడికి వెళ్తాం లేదా మీరు ఇక్కడ లోపల చెకింగ్ ఎక్కడ ట్రైన్ లో చెకింగ్ లేదా?
ఉందా చెకింగ్ అయితే ఉంది, ఎప్పుడో కానీ వెళ్ళాం.
ఉన్నప్పుడు ఎవరైనా వెంటనే గంటలో యాక్టివ్ అయిపోతుంది అంతే. ఇంకా పెట్టండి, 4 బయట పెట్టండి. కరణ్ గారే కనబడతలేదు నాకు. ఉన్నారండి, ఉన్నాడు
ఉన్నాడు ఉన్నాడు.
అనుకుంటాడు ఆయన ఎక్కడాలో పరిగెట్టాలో
చేస్తాడు. రాంభక్తుడు కదా. ఎవరా ఏంటిది?
వెళ్ళే టైం ఉంటుందండి. వెళ్ళాలి మార్కెట్ తీసుకొని కానీ వెళ్ళి రావు. దీనికి రాసేసి ఇందులో పెడతాను, నేరుగా పెట్టుకోండి. రాశాను. రోజు ఒక రోజు కంటే ఎక్కువ చేస్తాను. వెంటనే మీకు కవర్ అయిపోతుంది. చూసారు కదా మీరు
ఉమ్.
నేను తగ్గితే మాట్లాడుతున్నా అది ఒకసారి వేస్తే సరిపోతుంది, ఇది రెండుసార్లు వేస్తుంది.
ఏది 2 సార్లు ఇది జిగురు దగ్గర ఇది 2 సార్లు వేసుకోవాలి. ఇప్పుడు ఇచ్చేది ఒకసారి వేయాలి.
కూడా కాకుండా ప్రివెంట్ చేస్తాం.
నీదా
కరోనా గురించి తెచ్చాను ఇది ఎక్స్పీరియల్. ఇప్పుడు పర్సెంటేజ్ తగ్గిస్తారని మానేశారండి. పర్సెంటేజ్ తగ్గిస్తారని ఆ విషయం చెప్పరు. రాష్ట్రం చూసుకోవడానికి
పోయిన రోజు నార్మల్
Da.